Hello, I am Darryl and I'm a retired investor. So my portfolio is primarily geared toward income producing holdings. In my portfolio, I hold several real estate investment trusts, also known as REITs. I started and have been adding positions over the last 3 years. My REIT holdings represent about 17% of my total portfolio. My largest REIT holding is Realty Income at 43% of my REIT holdings. Realty Income, trading under the symbol O, has a current dividend yield of 5.94% with a 5-year dividend growth CAGR of 3.55%. VICI Properties, trading under the symbol VICI, VICI, is my second largest REIT holding at 21%. VICI Properties has a dividend yield of 5.91% with a 5-year dividend growth CAGR of 7.62%. NNN REIT, trading under the symbol NNN, is number 3 in the REIT category at 14% allocation with a current dividend yield of 5.35% and a 5-year dividend growth CAGR of 2.47%. Agree Realty sits at number 4 in the REIT portfolio with a current allocation of 11%. I plan to grow this allocation over the coming weeks and months. Agree Realty has a current dividend yield of 4.88%. with a 5-year dividend growth CAGR of 6.16%. Medical Property Trust, trading under the symbol MPW, is the smallest slice of my REIT holdings, representing only 2% of the REIT portfolio. This REIT is very speculative in nature. MPW has a dividend yield of 12.5%. MPW cut their dividend in September of 2023. One of MPW's tenants is currently going through bankruptcy proceedings. EPR Properties, trading under the symbol EPR, represents 4% of my REIT holdings. EPR has a dividend yield of 8.38%. EPR suspended their dividend payout during the COVID pandemic, resuming the payout in July of 2021. WP Carey, trading under the symbol WPC, represents 5% of my REIT holdings. WPC announced the spin-off of their commercial office properties in September 2023. As a result, WPC reduced their dividends with a current dividend yield of 6.93%. In early 2022, the U.S. federal funds interest rate began to increase and peaked in July of 2023, holding steady until now. The increased borrowing costs negatively affect the share price of REITs. When the borrowing rates begin to decrease, I expect to see the share prices of the REITs recover. The exact timing of the interest rate cuts is unknown, but many believe the Fed Policy Board will begin to cut rates at the end of the year or possibly early next year. The CME FedWatch tool currently shows a 72% chance of a rate decrease at the September meeting. At the last Fed press conference, Chair Powell relayed the board expects 4 rate cuts in 2025, implying closing out the year between 4% and 4.25%. The board additionally expects another 4 rate cuts in 2026, with an implied policy rate of between 3 and 3.25%. Next, we will turn our attention to fast graphs to develop an expectation of returns over the coming 18 months. We will look at each of the REITs in alphabetical order. One common thread that you'll probably notice in each chart is the price decline at the beginning of the Fed policy rate hikes continuing until the current time. And some of the REITs, depending on their holding types, may have experienced a big downturn in the pandemic period. Starting with Agree Realty for the past 10 years and forward 3 years, we can see that Agree Realty price was at or above its normal price to AFFO ratio, which is the blue line. The price is the black line. It is currently trading at fair value. Over the next 18 months, I anticipate Agree Realty could be trading between about $64, and if it gets back to the normal AFFO, we could be up to about $77 per share. That gives us an annualized return over that time of about 20.37%. Next, we'll look at EPR Properties. You can tell during the pandemic period, this one was especially hard hit during the pandemic because of its experiential properties, which for the most part was closed at that particular time. Prior to the pandemic, we can see that EPR Properties traded near its normal price to AFFO and its fair value price to AFFO. Over the next 18 months, if the price does return to fair value, we could be trading at around $63 per share. That gives us an annualized return over that time of about 42%. As I mentioned previously, Medical Property Trust is a speculative holding. One of the large tenants is working through bankruptcy currently. If that situation is resolved, MPW could return back to fair value and be trading at about $10 per share. That would represent a total return of about 129% or 72.3% annualized. NNN, like most of the REITs, traded above the fair valuation and normal price to AFFO prior to the pandemic and policy rate increases. Providing NNN can return to those levels, it could trade between $51 per share and $58 per share, providing a 30.7 return at fair value or 19.2% annualized. Realty Income recovered nicely after the pandemic, but was affected by the policy rate increases. As we near rate cuts, I expect Realty Income to return to the normal valuation of about $79 by the end of next year. This would provide a total return of about 58.6% or 35.3% annualized. VICI had its initial public offering in 2018, so we're not able to look back a full 10 years. VICI is currently trading at a price to AFFO of 12.8 times, but the market normally trades at 16.19 times, indicating a 32% upside. At a normal price to AFFO, we could expect that VICI could be trading at $38 over the next 18 months. This would provide a total return of 45.7% or 28% annualized. Finally, we will look at WP Carey. WPC spun off their commercial office properties, leading to a dividend cut. WPC has returned to dividend growth, but market sentiment does not appear favorable towards WPC at the moment. I actually expect WPC to trade sideways until sentiment improves. However, should WPC return to its normal price to AFFO, we could see WPC trading at around $66 per share, providing a 29.5% return, which is 18.23% annualized. Given the backdrop of anticipated policy rate changes, I am watching these holdings and adding if opportunities surface. I anticipate solid returns over the next 1.5 to 2 years. In future videos, I plan to cover each of these REITs in some detail to explain why I chose them for my portfolio. If you found this video helpful, please subscribe to the channel. Press the like icon along with the bell icon to receive notifications about future videos. I appreciate you taking the time to watch. If you have any input or suggestions about the video content, please leave a comment below. Thanks again.